My dear students, welcome back to our channel. In this video, I will be explaining the Bcom 5th semester subject Computerized Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 3 first important short question is: how to delete a voucher in Tally? Give steps. Answer. In Tally ERP 9, sometimes you may need to delete a voucher if it was entered by mistake. Deleting removes the voucher permanently from the system. Steps to delete a voucher in Tally. 1. Go to Gateway of Tally Display Day Book. 2. Find the voucher you want to delete. You can filter by date or type. 3. Open the voucher by pressing Enter. 4. Press Alt plus D, shortcut for delete. 5. Tally will ask for confirmation, select Yes. 6. The voucher is now deleted. Example. Suppose you entered a payment voucher of 5,000 rupees for electricity twice by mistake. You can delete the duplicate voucher using these steps, so your accounts stay correct and balanced. Tip to remember. Think of Alt plus D as the delete button for mistakes in Tally. Always double-check before deleting because it cannot be recovered once removed. Next important short question is: to purchase voucher. Answer. A purchase voucher in Tally ERP 9 is used to record the purchase of goods or services from supplier. It helps in keeping track of what was bought, from whom, how much was paid, and any taxes applicable. Steps to create a purchase voucher. 1. Go to Gateway of Tally Accounting Vouchers F9 Purchase. 2. Select the supplier's name, ledger, or create a new one. 3. Enter stock items purchased, quantity, date, and amount. 4. Add tax details if applicable, GST, VAT. 5. Enter total amount paid or payable. 6. Press Enter to save the voucher. Example. You bought 50 kilograms of rice from supplier A for 2,500 rupees. Enter supplier A, rice as the stock item, 50 kilograms, 50 rupee per kg, and save. Now your stock and accounts are updated automatically. Tip to remember. Purchase voucher is equal to record what you buy, from whom, and how much. It keeps inventory and accounting accurate. Next important short question is: 3. Debit note voucher. Answer. A debit note voucher in Tally ERP 9 is used when a business returns goods to a supplier or needs to reduce the amount owed to a supplier. It increases the supplier's liability and adjusts accounts accordingly. Steps to create a debit note voucher. 1. Go to Gateway of Tally Accounting Vouchers Control plus F8 Debit Note. 2. Select the supplier's ledger to whom the goods are being returned. 3. Enter the items being returned or the amount to adjust. 4. Add reason for return, optional, but useful for records. 5. Press Enter to save the voucher. Example. If you bought 100 pens from supplier B but 20 were damaged, create a debit note for 20 pens. The supplier's account will be adjusted, and your stock will reduce by 20 pens automatically. Tip to remember. Debit note is equal to I return goods or reduce what I owe, making accounting and stock accurate and error-free. Next important short question is: 4. Credit note voucher. Answer. A credit note voucher in Tally ERP 9 is used when a business receives goods back from a customer or reduces the amount a customer owes. It decreases the customer's liability and updates accounts and stock automatically. Steps to create a credit note voucher. 1. Go to Gateway of Tally Accounting Vouchers Control plus F8, Credit Note. 2. Select the customer's ledger who is returning the goods. 3. Enter the items returned or the amount to adjust. 4. Add a reason for return for proper records. 5. Press Enter to save the voucher. Example. Suppose customer bought 50 notebooks, but 10 were defective. You create a credit note for 10 notebooks. The customer's account is reduced and your stock is increased by 10 notebooks automatically. Tip to remember. Credit note is equal to customer returns goods or owes less, keeping accounts and inventory accurate. Next important short question is 5. What is a source document? Answer. A source document is the original proof or evidence of a business transaction. In Tally ERP9, it is used to record vouchers accurately. Source documents are important because they support accounting entries and help in auditing. Common types of source documents. 1. Invoice for sales or purchases. 2. Receipt when money is received. 3. Payment slip when money is paid. 4. Debit note credit note for returns or adjustments. Example. If you buy 100 pens from supplier A, the purchase invoice from supplier A is the source document. You use it to enter a purchase voucher in Tally. Later, during auditing, the invoice proves the transaction really happened. Tip to remember. Think of a source document as a proof paper that backs up every transaction. No document, no voucher. Always keep them safe. Next unit 3. Long questions. First important long question is 1. How do you record different types of business transactions in Tally 9? Explain. In Tally ERP9, recording business transactions is easy and systematic. A business transaction is any activity where money, goods, or services are exchanged. To record transactions correctly, you need vouchers in Tally. Each type of transaction has a specific voucher. 1. Payment voucher, F5 used to record money paid to suppliers, expenses, or others. Example, paying 10,000 rupee to an electricity company is recorded using a payment voucher. 2. Receipt voucher, F6 used to record money received from customers or others. Example, receiving 5,000 rupees from a customer for goods sold. 3. Contra voucher, F4 used for cash and bank transfers within your accounts. Example, transferring 20,000 rupees from your cash account to bank. 4. Purchase voucher, F9 records goods or services purchased from suppliers. Example, buying 50 kilograms of rice for 2,500 rupees from supplier A. 5. Sales voucher, F8 records goods or services sold to customers. Example, selling 100 pens to customer B for 1,000 rupees. 6. Debit note, Control plus F8 used when goods are returned to the supplier or the payable amount is reduced. Example, returning 20 damaged notebooks to a supplier. 7. Credit note, Control plus F8 used when customers return goods or reduce the receivable amount. Example, customer A returns 10 defective notebooks, their account is adjusted. 8. Journal voucher, F7 used for non-cash adjustments, like depreciation or corrections. Example, adjusting office furniture depreciation of 5,000 rupees. Steps to record a transaction in Tally. 1. Choose the appropriate voucher type. 2. Select the ledger or stock item. 3. Enter quantity, rate, and amount, if applicable. 4. Check details and press Enter to save. Tip to remember. Think of tally vouchers as special forms for each transaction type. Using the right voucher keeps accounts accurate, stock updated, and audit ready. Next important long question is: 2. What is a voucher? What are the various types of vouchers in Tally? Discuss. Answer. A voucher in Tally ERP9 is a record of a business transaction. It acts as proof of a transaction and helps in keeping accounts and inventory accurate. Every transaction in Tally is entered using the appropriate voucher type to update accounts automatically. Types of vouchers in Tally ERP9. 1. Payment voucher. F5 records money paid to suppliers or for expenses. Example, paying 15,000 rupees for electricity. 2. Receipt voucher. F6 records money received from customers or others. Example, receiving 10,000 rupees from a customer for sold goods. 3. Contra voucher. F4 used for transferring money between cash and bank accounts. Example, moving 20,000 rupees from cash to bank account. 4. Purchase voucher. F9 records purchase of goods or services from suppliers. Example, buying 100 kilograms of rice from supplier A for 5,000 rupees. 5. Sales voucher. F8 records sale of goods or services to customers. Example, selling 50 notebooks to customer B for 2,500 rupees. 6. Debit note voucher. Control plus F8 records goods returned to a supplier or reduces amount payable. Example, returning 10 damaged pens to a supplier. 7. Credit note voucher. Control plus F8 records goods returned by customers or reduces amount receivable. Example, customer A returns 5 defective pens. 8. Journal voucher. F7 records non-cash transactions, adjustments, or corrections. Example, recording depreciation of office furniture of 3,000 rupees. 9. Optional voucher. Used for special or irregular transactions not fitting other vouchers. Tip to remember. Think of vouchers as special forms for each type of transaction. Using the correct voucher ensures that your accounts, stock, and reports are always accurate. Quick trick to recall. F4 Contra, F5 Payment, F6 Receipt, F7 Journal, F8 Sales, F9 Purchase, Control plus F8 Debit Credit Note. Next important long question is: 3. What is a purchase voucher? Explain how transactions are recorded in purchase voucher with example. Answer. A purchase voucher in Tally ERP9 is used to record all purchases of goods or services from suppliers. It helps businesses keep track of stock and accounts payable automatically. Using purchase vouchers ensures that your inventory and financial records are accurate and ready for audits. Steps to record a purchase voucher in Tally. 1. Go to Gateway of Tally Accounting Vouchers F9 Purchase Voucher. 2. Select the supplier's ledger from whom you are buying. 3. Choose the stock items being purchased or expenses if it is a service. 4. Enter the quantity, rate, and total amount for each item. 5. Add taxes or additional charges if applicable. 6. Check the total amount and press Enter to save the voucher. Example. Suppose you buy 50 kilograms of rice from supplier A at 60 rupee per kg. You open a purchase voucher, select supplier A's ledger, enter 50 kilograms times 60 rupees is equal to 3,000 rupees and save. Tally will increase your rice stock by 50 kilograms and record 3,000 rupees as payable to supplier A. Tip to remember. Think of a purchase voucher as a proof of buying goods or services. It updates stock automatically, reduces chances of mistakes, and makes accounts payable ready for payment. Quick trick. Always check supplier ledger, stock item, quantity, and rate before saving. Purchase voucher is equal to I bought goods, stock increases, liability increases. This simple method ensures that business transactions are properly recorded, inventory stays accurate, and reports are always correct, making accounting easy and reliable. Next important long question is: 4. Write about purchase and sales vouchers in detail with example. Answer. In Tally ERP 9, purchase and sales vouchers are used to record buying and selling transactions of goods and services. They are very important because they update accounts and stock automatically, making business management easy. 1. Purchase voucher, F9. Used to record goods services purchased from suppliers. Steps to record. Go to Gateway of Tally Accounting Vouchers F9, Purchase Voucher. Select the supplier's ledger. Enter stock items, quantity, rate, and amount. Add taxes or additional charges if any. Press Enter to save. Example, buying 100 kilograms of sugar from supplier A at 50 rupee per kg. Enter 100 kilograms times 50 rupees is equal to 5,000 rupees. Tally updates stock plus 100 kilograms and records 5,000 rupees as payable to supplier A. 2. Sales voucher, F8. Used to record sales of goods services to customers. Steps to record. Go to Gateway of Tally Accounting Vouchers F8, Sales Voucher. Select the customer's ledger. Enter stock items sold, quantity, rate, and amount. Include taxes or discounts if applicable. Press Enter to save. Example, selling 50 kilograms of sugar to customer B at 60 rupee per kg. Enter 50 kilograms times 60 rupees is equal to 3,000 rupees. Tally decreases stock by 50 kilograms and records 3,000 rupees as receivable from customer B. Key points to remember. Purchase voucher is equal to stock increases plus payables increase. Sales voucher is equal to stock decreases plus receivables increase. Always check ledger, stock items, quantity, and rate before saving. Using these vouchers keeps accounts and inventory accurate and makes audit and reporting easy. Tip to remember. Think of vouchers as magic forms in Tally. Purchase voucher adds to your stock and liability. Sales voucher reduces your stock and creates receivables. Next important long question is: 5. Explain in detail about debit note and credit note vouchers in Tally. Answer. In Tally ERP 9, debit note and credit note vouchers are used to record returns or adjustments related to purchases and sales. They are very important because they correct stock and accounts automatically. 1. Debit note voucher, Control plus F8. Used when a business returns goods to a supplier or wants to reduce the payable amount. It decreases the stock and reduces the amount owed to the supplier. Steps to record. 1. Go to Gateway of Tally Accounting Vouchers Control plus F8, Debit Note. 2. Select the supplier ledger. 3. Choose the stock items being returned and enter the quantity and rate. 4. Save the voucher. Example, you bought 20 defective pens from supplier A at 10 rupees each. You return all 20 pens. Tally decreases stock by 20 pens and reduces payable to supplier A by 200 rupees. 2. Credit note voucher, Control plus F8. Used when a customer returns goods or to reduce the amount receivable. It decreases the stock and reduces the money the customer owes. Steps to record. 1. Go to Gateway of Tally Accounting Vouchers Control plus F8, Credit Note. 2. Select the customer ledger. 3. Choose the stock items being returned and enter the quantity and rate. 4. Save the voucher. Example, Customer B returns 5 defective notebooks sold at 50 rupees each. Tally decreases stock by 5 notebooks and reduces receivable from Customer B by 250 rupees. Key points to remember. Debit note is equal to return to supplier reduces stock and payable. Credit note is equal to return from customer reduces stock and receivable. Always verify ledger, stock items, quantity, and rate before saving. Tip to remember. Think of these as reverse transactions. Debit note is equal to supplier return. Credit note is equal to customer return. Using these vouchers keeps inventory and accounts accurate and helps avoid errors in reports or financial statements.